Now, a former president of the Ghana Association of Banks, Dr. Andani, has maintained that viable projects will be still funded by commercial banks despite the 20% surge in non-performing loans in half a decade. This is despite moves by commercial banks to cut back on lending as a result of the rising non-performing loans and current economic challenges. The former president of Ghana Association of Banks has been speaking on PM Express Business Edition.
No, look, I agree completely with that. Creating risk assets on any bank's book is clearly the decision of the bank. Our credit policies, our sector selection policies, risk acceptance policies, they're all intended driven policies and actions. So you cannot really, even including the levels at which you invest in government paper or for that matter, financial instruments on the market, except for certain statutory, requirements that says, every bank should put X amount in government paper or in treasury because of regulatory compliance. Otherwise, the creation of risk assets is entirely the discretion of banks. And therefore, you can say that NPLs, yes, the banks have responsibility. But remember that a loan of any kind is a promise. It's a promise. It's a promise predicated on a whole lot of things happening. Some endogenous, that is, those can happen within the bank and within the firm that you are lending money to, and also exogenous, significant matters that can happen outside of your control. What we try to do in credit is to try and gauge as much as possible the matters that are under our control and how we can hold it together and estimate to the best with your risk lens on the exogenous things that can militate against or work against your credit and try to get a balance. That's when you create that kind of asset, and every economy needs that, because if you all freeze, nothing will happen. So you got to take risk. So we take it within a measured risk envelope. Now, when you have a government, we all go to school and we are told that governments never default. I mean, first lesson in your risk class is government paper. So immediately your government, which is a significant part of your GDP, fails to pay. Just look at the snowball effect on it. Companies that are owed money, who were lent money by banks and financial institutions, believing that they were rendering services and goods to a government or an entity that would never default. Suddenly, they are told that they cannot pay. So even though that was estimated, the rate of it is out of control. You were looking at foreign exchange between 8, and you are saying in 5 years' time, let it sit around 10, 10.5. It's now sitting at 11, and you granted a 5-year loan, estimating that at that time 6 point something, 5 years, and you're now sitting at 11. So all those things and the ability of the market to adapt to these changes. So I'm not blaming, or I don't think the banks will necessarily blame anybody from NPL, but this is the background to it.
And we've got to engage the perspective of industries. And joining us via Zoom is the Chief Executive Officer of the Ghana National Chamber of Commerce and Industry, Mark Bedu Abuaji, for more on this. Mark, thanks so much for joining us here on the Marketplace. First off, what do you make of this fresh assurance coming from the former president of the Bankers Association, Andani, and even the current Chief Executive, that good projects will not suffer despite moves to scale back on lending as a result of the high non-performing loans?
I think it's a good news. If any business has the potential to expand in spite of the current economic challenges, and there's an assurance that you get a loan or the facility that you need to expand, then of course it's a good news for businesses. But it's coming from somebody probably who is not in the banking system now in terms of providing the facility. I hope the banks are listening, and I hope that they have strong books to be able to support businesses that would want to borrow from them, in spite of the increase in the non-performing loans.
I see.
But I must say that I'm not really surprised with the increase in the non-performing loans. I mean, any economy that is going through the macroeconomic crisis like we are having now, one of the things that you expect is that non-performing loans will go up. And if you look at the background of our challenges where the policy rate keeps increasing. Invariably, the interest rates are also going up. So definitely it becomes extremely difficult for anybody who borrow with this high interest rate be able to pay back when they themselves are not making enough money because the cost of production is also going up. So it's a difficult situation, but we are hoping that the banks, after their risk profile, in fact, before they give facility to anybody, they have to look at the risk profile of the business, the ability to pay. And also look at the banks, also their books, their ability to also to absorb any non-performing loans within their books. And then based on that, I think they will be able to provide this facility.
I see. The good news, however, is that the banks say they are engaging government to see how the debts owed contractors can be paid back on time. How do you see things playing out in that?
It's good news. In fact, we have a lot of these contractors who have completed the work for government and they have not received payment for the work that they have done. In fact, some of our members are going through difficult moments. I know those who have passed on because they have taken loans and they are not being able to pay and the banks are on them. I know some of them which they have confiscated their properties because they are not able to pay. I have a friend in Cape Coast, for instance, who built a whole market using loans and he has not been paid and he's going through a difficult moment. So if the government can take up this bold decision that they are going to pay this contract, or the monies will go through the banks, it means the banks also get the liquidity to be able to lend to other businesses who will be willing to also take facilities from them. So it's a very good news for us, especially those who are into the construction subsector. If you look at the GDP for the first quarter and the last quarter, you realize the construction sector contracted because a lot of them have done work that they have not been paid. So they don't even have the money to go on and expand or do more jobs. So once the government is giving them the money, they can expand, and the jobs that are hanging, the unfinished ones, they'll be able to complete it once the government assures them that they're going to get their money.
Again, there are proposals that some of your members with good books should look at issuing corporate bonds. Is this something you consider or worth considering?
Yes, I mean, now we are looking out for various options of raising financing. If you look at financial architecture and of course the kind of businesses that we have, mostly they finance the activities using debt and they're really going straight to the banks for loans without looking at the other options like going to the capital market or issuing capital bonds to other organizations that have funds to invest. So I think it's a good call. The fear is that the businesses that we have here are so small and may be extremely difficult for them to issue some of these bonds. But the bigger ones with the capacity to do that, I think they should take advantage of it. Because the banks, in fact, if you look at the Bank of Ghana report, actually for, as at August, credit to the private sector in real terms contracted by 21%, which means that the money that businesses are getting in real terms have gone down. So the banks are also a bit skeptical when they are giving money to these businesses because of the risk attached to some of these businesses. But if there are options of raising funding, that the grant is there and also going to the capital, even local and international, I think any business entity with a strength should consider this option very well. It's very, very good, and I think it will help them developing their business.
Mr. Budoraji, give me a sense of how your members are faring during these times.
Well, it's still a difficult moment. As I said the last time, nothing has really changed in terms of the cost of production. In fact, if central banks should maintain a policy rate at 30%, what you expect is that the commercial banks will at least also maintain their lending rate between the 30 to 45%. You've seen utility tariffs also going up. We've seen maybe some stability in the foreign exchange market, although the rates are still very high. The taxes are still there. The growth and sustainability levy, the excise duties, they are still there. So things are still hard, but we are so hopeful. No business will set up and decide that one day I'm closing down because I'm going through challenges. The business should be resilient enough to be able to withstand some of the difficult moments. So we are hoping that things will improve. But the government is also expected to do its bit of working hard, especially the Bank of Ghana together with the Ministry of Finance, to ensure that some of the policies that they are bringing out are policies that are conducive enough to ensure businesses are able to produce, make profit, and also expand to be able to employ more people, to reduce the unemployment rate that we have in the economy.
Finally, earlier we played the voice, or we saw the communications director of the IMF giving indications that Ghana is likely to get its next tranche based on what they've gathered so far. During the first tranche, would you say it's impacted positively on the operations, and what do you foresee happening?
Well, the first tranche, I must say, we have seen some positive signs. But for nothing at all, it brought some confidence into the economy, because the moment the announcement was even made, we realized that the city started experiencing some stability. And when the first tranche came in, we've seen the city hovering around 11.5, 11.6, which is good for businesses because you have to be able to predict when it comes to the foreign exchange market. There are also signs that the other foreign investors are now getting the confidence to come back to invest in our economy. So with this second tranche, which I'm very hopeful that we are going to get, looking at the things that we have done, I think things will improve. The city will put up a strong performance. We are also likely to see inflation also coming down. What I have said is that all these things will work well when fiscal policies is also supporting some of the activities that are being undertaken. So with the IMF, we are thankful to them, and we are hoping that the money will come on time to be able to stabilize the economy. You know, when we get into the end of the year and people are importing, we put a lot of pressure on the dollar, because you need dollar to be able to import. Other companies are also repatriating their profits, so we need money to be able to do that.
All right.
Otherwise, we are likely to experience another deflation at the end of the year.
Mark Bedu Abuaje, CEO of the Ghana National Chamber of Commerce and Industry, always a delight to speak to you here on the marketplace.